Mr. H.M. Bangur, Chairman of Shree Cement. Mr. Bangur, a very warm welcome to you to NDTV Profit, and thank you so much for speaking with us on your numbers. I'll quickly go through what the key metrics have been. Revenue down about 11-12%. The EBITDA has also been down about 23.7%. Margins have come off a little, and net profit has come down as well. But this is, in terms of estimates, exactly what was expected. In fact, the EBITDA is a beat and profits in line. Let me get this commentary from you, Mr. Bangur. The problem has been muted demand growth, isn't it?
Demand growth is one part, but it is basically the base effect. Last year, the December quarter was by far the best in the company history. But when we see sequentially, our volume growth is highest in the industry. So far, the results which have been published, about 16%. The profits are also healthy. But last year, this quarter was very, very exceptionally good. Good power demand was there, good margins were there. We had low price coal with us, but now that is there. But going forward, our cost control is, you can see, is much better. It is about 9% lower cost. So going forward, we expect margins to be still better.
So let's look at that outlook. You are expanding capacity quite aggressively. Are you looking at demand matching up? Because you talked about the base effect, and that's understood. I'm just trying to understand what the demand picture is as per you.
Demand will be growing in India by about 8% or so. Normally, in the past, we have seen the demand growth is 1.3 times the GDP. Even by conservative estimate, if I see that GDP grows by 6%, then also demand will be growing by 8%. So demand growth is very healthy.
Where is that growth coming from? Are you, because I'm also speaking to you ahead of the budget, are you hoping for more government capex to come and push it? What is the private demand looking like?
Government capex will be definitely coming in. Because again, here the base effect, this year the government spending was quite low compared to all other years. New projects startup was low. All the pent-up demand should be coming in the coming year. Secondly, when we see the profile of the individual house builders, whatever money was being made by the time he was 45 and thinking of making a house, now that he is able to earn that much, and younger people of around 35 are making the houses. House buildings is much faster in the personal sector. Everybody now is able to afford a house, so it seems.
Well, which is actually good news, even though the income growth is not looking that strong per se. Household debt has actually gone up too. But Mr. Bangur, good morning to you. I heard your comments about the unit EBITDA so well, but that's not a surprise, right? You've done this all through and through your entire life cycle. How do you see these shaping up in the quarters to come? Is what you've delivered in quarter 3, is that a sign of what you could do in calendar year 25, or could it be better if pricing improves, sir?
If the pricing improves, everyone will be much better off. And prices are expected to improve, as if we see in the last 10 years, cement prices have only grown by 1% CAGR, 12% increase or so in last 10 years. So cement price increase in the building construction material industry is much lower compared to even bricks or steel or anything. So the price rise, maybe next year, maybe after 2 years, but the price rise has to be there. The cement industry's margins have come down over the years, and the margins are maintained because those who are able to cut costs, improve efficiency, are able to do better.
Okay. Sir, where, I think Tamanna asked this to you earlier, but where within the regions do you foresee the strongest probability of demand growth? Because we know this quarter north pricing helped you, but where in terms of demand would the likely strongest growth be according to you?
Maximum growth can be and should be in East India as the base. Again, the per capita consumption of East India is by far the lowest, but the price can be good only in Central and North India, as there is not enough capacity in Central and North. East has still overhang of some capacity, but the growth will be much better here. That is what we expect.
Sir, what was your EBITDA per ton this quarter?
It is around 1,080 rupees.
1080.
Yes.
And what is the outlook for it when you close out the year, the financial year?
Close out the year, total EBITDA I will not be saying, but next quarter should be better than this quarter in the terms of quarter EBITDA. That's all we can right now say. After all, it is a commodity. The markets can change overnight.
Of course, of course. So that I assume from that statement that Q4 so far has been an improvement over Q3.
Of course, with a lot of confidence I am saying this.
Okay, that's important. Thank you so much, Mr. Bangur, for speaking with us, Chairman of Shree Cement.